Hey everyone, we're expecting quite a loaded day today. We're having everybody and anybody reporting from Google to Tesla to T-Mobile, IBM, General Electric, and plenty others, CME Group, you name it. We have so many things going on today. The question on everyone's minds is whether the market is going to drop based upon today's results. Really, if we're going to be objective, we're going to look at most of these companies on an individual basis. They are doing quite well, have been doing in terms of growth year over year quite well. But we are seeing a lot of cracks when it comes to various components of what today is going to bring, such as Tesla. Tesla, we know, have seen troublesome times recently due to Elon's shenanigans and just production numbers, delivery numbers, all of the above, you name it. If it's tariffs impact, EV tax cuts that's going to be removed, so many things that are impacting Tesla in the EV market overall. And so there could be some surprise today. Most people really kind of shrug off today as just another regular day. What I'm seeing in the technicals, and in fact, I'm planning to make another video talking particularly about that, is that, well, if we're looking at the overall conditions of the overall market, things are, first of all, we are now stuck at the resistance level that is quite major, especially when we're looking at the S&P. It becomes very, very evident. It is a very major resistance level that has been holding us off for quite some time. We've basically been respecting this level since we went underneath it in 2016. It was the very same resistance that stopped us, if you will, at COVID high at around November 2021-ish, January 2022. That the very same resistance played a role back then. If you can see, you can also identify its behavior just recently. It already came into play just right here on November 2024. It came into play again here in December 2024, and here again in February 2025. And right now, here we're stumbling on it again here on July. So this time around, as we're entering reporting season and we have major players reporting their results, and we're looking at the same time at economic conditions, whether it's US or globally, we know there's plenty of trouble and turmoil potentially to come. And if we combine that with the technical analysis of everything we've been seeing recently and the recent market behavior and the sort of major signals in the market that really we are moving into more of a longer recessionary period that has been held off by the Fed's and the current administration's actions, really it did not solve the inflation problem, which is at the core of everything right now, the geopolitical instability, oil prices, again, inflation on all sides of things, if it is, which is at the core of everything at the end of the day. A supply chain that is still far from being normalized since COVID. So there's plenty of factors that are still very, very bad. Consumer confidence, of course, some would argue that it's stronger, but I would argue that no, it is just a almost forced outcome because the current retail participants in the market were very, very much afraid and were FOMOed into the market in a way, not realizing that they're basically FOMOing into the peak of the market. If we're looking at things from a cyclical standpoint, which most people are simply not familiar with, which brings me to my next point, by the way. My community is absolutely more than prepared, was completely aware and understands the current circumstances. We understand things such as, the trend is your friend. It is not just a slogan. It means a lot more than you realize. My community, when I talk about my community, I'm talking about a Discord community that I've created. It contains here, you can see the testimonials. For example, just last month, one of our members, within 31 days, made 183,000, we'll call it 184,000 within basically a month using the methodologies that he was taught by me in the one-on-one academy. But you don't have to go through the academy. You can also join the Patreon, which this is the Patreon. It's patreon.com/investory. That's how it looks. Now, if you become a member, what you get here, it's right now only $30 and only $60. I say that because the prices are future prices are going to be slightly higher than this. You can do this pay annually. This way you do save some, and instead of paying $30 a month, it's going to be only 24 or 48 instead of 60. And you get plenty of perks. First of all, being completely aware of my portfolio. What am I buying? What am I selling? Why? How? Plenty of other channels, as you can see in the Discord. Plenty of material, especially most of it is technical analysis focused because we are data driven community. We don't just, guess and I have a gut feeling sort of thing. No, we don't do that. We don't speculate on what the events may translate into the price action as we are following technical analysis, which is not subjective but objective, and that is the all the beauty about it. We learn everything about the cycles, the trends, the tools, the patterns, why, how, what brings these things about, why you should use one thing over another. And this is what the community is all about. And when I say my community, again, there are plenty of members of the community is growing very, very rapidly. And people understand the true value of technical analysis because it doesn't really predict the future as much as it allows you to create almost this or rather really recognize and identify the several most likely scenarios given the support and resistance levels that are dictated by the market itself. So in essence, there's very little room for bias there, if at all. And those who know understand that the market is tremendously accurate and has been following these cycles for quite a long time. So given all the conditions and given everything we're seeing and now going into these major companies reporting, we may expect and see, and given this resistance level, of course, I have mentioned and spoke about this in my community, how we still may end up going as far as 6,491. You might as well call it 6,500, simply because it's being so close to that major resistance range. It's not a level as much as it is a range. You can see it fluctuates all the way between 6406.7 to 6491.4, and that entire vicinity is a really strong resistance range. Again, I emphasize the idea of a range, not just a individual line, right? Just let's be clear about that. Meaning we can fluctuate the price action, may get stuck within that minefield of sorts, following the confluence with this with the median of this channel to the upside on our way to sort of into the corrective area to the downside, as we are seeing based upon the momentum here. And so there are plenty of signs that are showing us that the market may go very shortly, and something I've been warning in my videos, that we may start seeing the market taking and not really giving back the same way as it was before. Basically, the momentum kind of slowly teetering to just coming to nothing, basically, or almost dying down. And we can arguably already recognize by the smaller time frames how the market is losing momentum and basically running on fumes right now. We are very weirdly on the daily time frame, something that we have kind of looked at and have an issue with is that daily time frame where we are crossing in from that bearish territory into that bull territory. But that is exactly why we're suspecting this 6,400 may still come into play, although it is not all that certain. And even if so, it still does not change the overall cyclical nature of the market, the same way we saw the market transition and cross over this resistance level. As we said before, we may do that all the way through here, spend more time before the market breaks. Although I highly doubt it, as the momentum panning out on the larger time frames, such as on our weekly, which is very significant because our weekly time frame does signify a longer duration sort of trend, something that may persist for months on end. In fact, I would arguably say, 3, 4, 4, 5 months, maybe even more actually. The weekly time frame may represent a very long duration simply because merely four candlesticks are a month. And we're already seeing when the market starts breaking downwards, collapsing, if you will, it breaks down. It loses its air far quicker than it inflates. Basically, inflates far quicker than it does inflate. As as I like to say, the market gains in droplets but loses in buckets, right? So, given everything, given that the market is very, very unstable right now, given that all the conditions with the Federal Reserve, with the overall economy, with the big beautiful bill, with the tariffs, potentially a trade war, if you will, to be more objective about things, inflation, oil prices, you name it. Given everything all together, formulating that entire equation, and given that we already, by the way, spoke about this in the community as well, just for you all to know, we are potentially seeing a upcoming incline on oil prices, taking us all the way to 78, 96, then facing the resistance of 80, and subsequently, oil prices will be eating away at companies' profit margins, which are slim right now, anyways. And yeah, I mean, let's be honest about things. Things are actually very, very problematic, and it is kind of amazing. As one of my members, shout out to you, my amazing community. One of you said the other day, it is quite amazing how high we got under these conditions. Given today's open, as we're about to open in about 5 minutes, we're about to open up with a significant gap to the upside, which is roughly right now resides at 63.40, 60, 60, 63, 42, 63, 38, 9, depends on the little increment there that's going to be between the continuous contract and our regular, SPX. So it is far more probable to be somewhere around, like you said, somewhere around that resistance level, that purple line that we saw the other day. It's basically entangled with it in pre-market. We're just not seeing it right now, which gives us 6,333, give or take. And as we're about to open, we're potentially going to close this gap because it's quite a small gap all in all. Momentum right now arguably is um, transferring to the bearish side. Arguably, it's not certain yet because again, we do have a couple more minutes sort of to burn and kill within that bullish momentum before we potentially see our bearish momentum take over. But with the market open being so volatile, potentially we may see this turn around quite rapidly, as we're seeing it right now, doing quite right now, right in front of our face. So all in all, overall conclusion, we are potentially going into what will be a horrible bloodbath. Yeah, a very bad bloodbath that most market participants are not prepared for, do not understand where it will come from, although it has been sort of in the system, in the barrel for quite a long time. And the longer we've been postponing it, the worse it gets, really. Uh, that's it, boys and girls. I hope to see you all in the community. See you on the next one. Bye bye.